Hey everyone, welcome back to the channel. Today, we're taking a deep look at Avalanche, AVAX USD, and the infinity signal is showing a potential momentum shift forming right beneath the surface. This chart is giving us one of the cleanest examples of a market moving out of bearish exhaustion and into structural reset. We're on the daily chart using Heikin-Ashi candles, with price sitting right around $20.30. After dropping from roughly $27 down toward $18, Avalanche has now entered a period of tight consolidation between $19.50 and $21.50. These small-bodied candles with short wicks tell us volatility is fading. That's often the calm before the next expansion phase. Now, the moving averages tell their own story. The short-term green line is still below the red long-term line, confirming the bearish structure that's been in place since early October. But here's the key. Price action is starting to flatten below those averages, and that's usually where the next reversal begins to form. Let's talk about the infinity signal. The daily and weekly deck, shown in blue, is still holding its bullish color, meaning daily momentum is trying to align with the weekly trend. Those readings clustered around the mid-range tell us bullish pressure is emerging, but it hasn't yet accelerated. Then, the weekly and monthly deck underneath still shows mostly red, a sign that higher time frames remain in macro correction. But look closely. Small blue pockets are beginning to appear inside that red band. That's one of the first visual cues that the bears are losing control, and that transition energy is building for a reversal window. If you follow these texts long enough, you'll notice this overlap. Blue emerging over red often happens just before a breakout from consolidation. The momentum oscillators beneath the decks confirm that picture. In the daily to weekly layer, both %K and %D have turned upward from oversold conditions and are hovering just under mid-range. That means the short-term cycle is regaining strength after bottoming out. Meanwhile, the weekly to monthly oscillator is still suppressed, still showing that the macro cycle hasn't fully turned yet, but the lines are curling upward. That early curvature is what we look for when timing the front edge of a new macro wave. So even though the larger structure is still bearish, short-term energy is already rebuilding. Now, look at the gauges in the upper right corner. Momentum is starting to lean bullish, showing that buying pressure is quietly returning. Volatility remains compressed, which means a larger move is forming beneath the surface. And while the trend strength gauge still leans slightly bearish, it's flattening out, a classic sign of exhaustion before a reversal. Together, these readings paint a clear message. The market is recharging, building tension, preparing for its next expansion. So what's next? If Avalanche can hold this structure, the next upside target sits between $22.50 and $24. Above that, a clean break over $25 would mark confirmation of a higher phase momentum cycle. On the downside, $18 remains the key support to watch. As long as that level holds, the bias stays neutral to bullish heading into November. Right now, we're in the early stages of a structural reset. Bearish momentum is weakening, compression is tightening, and infinity signal readings suggest that volatility expansion is imminent. In short, Avalanche looks like it's preparing for its next big move. We're watching a classic transition from bearish exhaustion into early bullish realignment, the perfect setup for traders who can recognize the rhythm before it breaks. That's it for this breakdown of Avalanche. If you found this helpful, be sure to like, subscribe, and turn on notifications so you don't miss the next Infinity Signal forecast. The Infinity Signal. Trading the future.